Insurance is one of those necessary evils that we all have to live with. We're all going to have some kind of insurance bill in our lives, 9 times out of 10. But some insurances are very necessary and some are practically useless. And that's exactly what we are going to talk about today. I'm going to give you 5 types of insurance that are actually very practical for financial independence, and 5 that are essentially useless if you're on the path to financial independence or if you are already financially independent. And I just want to say really quick as a disclaimer, I'm not like an insurance expert or anything like that, so you shouldn't take what I say in this video as practical insurance advice. This is purely my opinion and for entertainment purposes. Before we get started, I want to get some general rules on the table when it comes to insurance, especially when you have a financial independence mindset. Okay, so a general rule to keep in mind is that if you can easily replace something, then you probably shouldn't be insuring it. So if you have an item that costs $100 and you can easily afford to replace that $100 item, you probably shouldn't pay someone to insure it for you if you can easily replace it. And that can be multiplied up to whatever you want it to be. If you can easily replace your $10,000 car and it wouldn't devastate you financially, then maybe you don't want to insure it as far as replacing the car if you were in an accident. Maybe you want to self-insure because that could save you some money on insurance. Another general rule that you want to follow is you don't want to double insure. Okay, so if you already have, let's say, insurance on this item from something else, but maybe you don't know at the time, so you need to know, but you shouldn't insure something twice with 2 different types of insurance, and that might be happening within your life. And I'm actually going to give a good example of that in this video. Another good rule to follow, especially with those of us in the financial independence community, is to when you have insurance, is you want to protect your assets. The point of most of the insurance that you have should be liability, and it should be one way to preserve your wealth. So you definitely don't want to lose, all your wealth or a significant portion of your wealth within some kind of lawsuit for some kind of liability. So that is a big reason why insurance is very important for those of us on the higher end of the net worth spectrum. And last but not least, when it comes to insurance, you want to get the highest amount of deductible that you can reasonably afford, because that is typically going to drive down your monthly insurance premiums or your regular premiums, the higher of a deductible amount that you have. So you're saying that, I can pay more out of pocket for my own money. I don't need you except for in a very extreme case. So if you can get the highest deductible possible, that would be the best in most circumstances. Okay, now let's get started on the useless kinds of insurance that you should definitely avoid if you're on the path to financial independence, if you're already financially independent, because these are usually just wasted money, wasted expenses. And the very first one is extended warranties. So typically extended warranties are definitely a waste of money. These companies that are offering these extended warranties, they are very confident that their product will not require you to actually use that warranty. And so they have mathematically, they've done the math many times over, and they are very confident that they will have to pay much less to fix whatever it may be given that warranty than what they will receive by people buying that warranty. So the math plays out in their favor almost every time. Extended warranties are typically a waste of your own money. Plus, if you have pretty good credit cards, and if you bought that item with a credit card, you might be surprised to find out that your credit card actually already offers an extended warranty on their part. So a lot of credit cards, they might take a warranty that's 2 years, and they say, well, we'll offer another 2 years, or we'll offer another year. So you might already have an extended warranty for basically free included within your credit card. So definitely check that out. Number 2 on our list of useless insurance for F.I.R.E. is going to be cell phone insurance. So cell phone insurance is probably a very big waste of money because it is probably one of those items that you can easily replace with cash, especially if you're on the path to financial independence, because you're probably pretty savvy with your money. So if you can replace that item, then there's no need to have insurance on it without devastating your financial circumstance. So that goes in line with many other things. For example, you probably shouldn't be purchasing, a top-of-the-line $1,000 plus phone. You should probably have a phone that is much less than that, maybe in the $200 to $300 range. You can still get a really great phone for that amount, and replacing that kind of phone, $200 to $300, is going to be a lot easier on your pocketbook than it would be to replace the, $1,000, $1,200 phone, whatever it may be. So don't buy expensive phones, and don't insure them as well, because typically you're going to lose most of the time on that insurance claim, because not all the insurance claims on phones will pay for everything what you expect them to. Number 3 on this list for useless types of insurance is the private mortgage insurance. And so no one wants to pay PMI. So PMI is actually you paying for insurance on behalf of your lender, basically for them to take out the risk in order to lend money to you. So you're paying for their insurance in some kind of weird, wacky way. And so you are paying for the bank to take on the risk of loaning to you. And no one wants to do that. In order to avoid PMI, you can get it by obviously paying cash for a house. You can do it by typically putting at least 20% down on normal conventional loans. And then if you have a VA mortgage, if you're a veteran or active duty, then you can typically get a loan without any PMI. So definitely try to avoid private mortgage insurance as much as possible. Number 4 on our list is rental car damage insurance. So whenever you go to rent a car, they're always pretty much going to ask you, do you want the rental car insurance damage insurance? And usually it's like $11 to $15, per day or whatever when you're renting the car. And a lot of people say, that's, peace of mind. I'm just going to pay for it and then go on my way. And this might be a big mistake because first off, your regular insurance might already cover the car rental that you are renting. You want to make sure that your car insurance actually does cover the car rental when you are doing it. So that might already be done for you. If you were to actually purchase it from the rental car company, you might be double insuring, and that goes against one of the general rules. While at the same time, certain credit cards, they offer car rental insurance for practically free. Sometimes they can be secondary to your primary insurance, and sometimes they could be, primary. So you don't even have to include your actual insurance company. So make sure you check out your credit cards because you might already have insurance offered on those credit cards, or I should say, you might already have car rental insurance on your regular insurance with your regular insurance provider. Last but not least, number 5 of useless types of insurance is life insurance. So I might actually get a lot of flack for saying life insurance. A lot of people are very passionate about their life insurance, but this really applies only if you are very close or already considered financially independent. And that's because you have to look at what the purpose of life insurance is. So at least the way I see it is the purpose of life insurance is to replace your income and keep your family, make sure that they have enough resources financially. If like the main income provider were to die, tragically, of course. If you were to lose your life, your family would be set theoretically with this life insurance. But if you are already financially independent and you were to unfortunately die, your family should already be well off since you are considered financially independent. Or at least, can they provide for themselves if you were not around? Do you have enough in net worth to set them up for at least a long time for them to get their life on track? Whatever it may be. I think that life insurance and already being financially independent or already having a really high net worth on the path towards financial independence, it's just another expense that is kind of wasted. And then if you're single and you're pursuing financial independence, I really don't see the purpose of life insurance in most circumstances. So now that we know 5 types of very useless insurance, we need to know what are some actual useful types of insurance for financial independence. But before I move on to that, I just want to say really quick, if you're enjoying this video, please make sure that you like it and give it a thumbs up. It really does help me out and I really do appreciate it. While at the same time, consider subscribing to the channel and hitting that bell for notifications because every single week I'm putting out new videos on personal finance, on financial independence, and I just know that there's something that I can help you with. Currently, I'm putting out new videos every Tuesdays and Fridays at 8 a.m. Pacific Standard Time. So make sure you're subscribed and you have that bell on because you don't want to miss those videos. Now let's move on to those actual useful types of insurance. And the very first one I want to talk about is health insurance. So I think that health insurance definitely is very useful to have because a health emergency could definitely, bankrupt most people. Even if you have a relatively high amount of worth, the bills could pile up very, very fast if you have no health insurance at all. So at a very minimum, I think that most people, especially those in the F.I.R.E community, should try to protect their assets by having at least catastrophic health insurance that covers, maybe a very high deductible, but also covers beyond that really high deductible in case you end up with really exorbitant amounts of medical bills. Number 2 on the list is auto liability insurance. So this is typically for if you actually cause an accident and you cause harm to someone within the vehicle or the passengers, your insurance company is going to pay out in order to basically help with their medical bills and maybe some other stuff as well. So I think that is definitely very important to have. Liability is very important for those of us that have higher amounts of net worth, especially those in the F.I.R.E community, and it's also usually typically required by law. if you own a vehicle. So that's definitely a good reason why to have it. And just as the same with that, number 3 of useful insurance is auto property liability damage. So just like with regular liability, this only covers if you damage someone else's property. So typically this is if you hit someone else's car, maybe you hit someone else's house, I don't know. Whatever you do, if you hit something else that is someone else's property, this is usually what's going to be paying for that rather than out of your own pocket. So liability in this regard is very important as well. And again, it is typically required, state laws typically require you to have it anyway when you operate a vehicle in your name. Number 4, just like those types of liability, but has to do with your home. So if you are a homeowner, you should probably get homeowners liability insurance because it is a very good way for you to protect your own assets in case someone decides to sue you for whatever reason, getting hurt on your property, whatever it may be. So I think that homeowners liability insurance is very important for those of us in the F.I.R.E community who are homeowners and we want to protect our actual assets. Last but certainly not least, of very useful types of insurance for F.I.R.E is going to be umbrella insurance. So umbrella insurance is basically one extra step, one extra coverage above all those other types of insurance. So if you have automobile liability insurance, automobile property liability, homeowners liability, you have that cushion of how much they're maximum going to pay out. Let's say you have, I don't know, $1 million in liability for your auto insurance. So up to $1 million, your auto insurance company will pay out in medical and whatever other kind of fees that you require to pay. But beyond that, you would technically be on the hook for it. So that's where umbrella insurance comes in. So umbrella insurance kicks in after your other insurance has already been depleted. And umbrella insurance is really important typically for people who have very, very high amounts of net worth that want to protect all of those assets at any cost. Because, let's be honest, the higher amount of net worth you have, typically the more lawsuits are you going to be involved in. Somehow it just happens that way. So umbrella insurance might be very important to you. Usually it is very, very low cost because it doesn't kick in until after those other ones kick in. And the likelihood of you actually needing umbrella insurance is probably very low, hopefully, but it might be something very useful for financial independence. And speaking of things that are useful for financial independence, another thing that is very useful is this video that I created called How to Achieve Financial Independence in 10 Years or Less. And if you haven't watched that video, you need to right now. Okay, thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.